Good evening, everyone. Thank you so much for joining in for this webinar. This is our first of its kind healthcare opportunity, which we are rolling out. Been working in for this opportunity for close to about 1.5 years, and there is multiple other assets which we're going to roll out in the similar segment subsequently as such. In the last 1.5 years, the amount of research and the amount of people we've been meeting, especially in this segment, have been overwhelming to us to understand this segment very closely. And then when we felt this is a right opportunity for us to dive in, is when we are diving into this healthcare opportunity in Nifty. So the current opportunity which we are acquiring is about 289,000 square feet of hospital space, leased to a grade A tier 1 multi-speciality hospital brand, which has close to about 2,500 hospitals across India. The asset is going to be valued at about 83.3 crores, where we're raising it across two tranches because we have limitations on the number of SPVs, the number of investors who can be in one SPV. So the first tranche will be 45, and then the subsequent tranche will be in another SPV as such. We have a 25-year lock-in with this tenant and a 30-year lease duration. The property is just at the end of Bangalore, at the tip of Hosur. So it can cover to the industrial segment of both Hosur and Bangalore, which is Bommasandra, Tibele, Nickel areas. It can cater to all the factories and in and around that segment. The current hospital operator which we're working with, already has existing two hospitals within a 20-kilometer radius as such, and they are now expanding due to the demand they are foreseeing in this particular location. What is exciting about healthcare to us in general is the private equity business is now scaling up in the healthcare segment. It is corporatizing the entire healthcare segment to the way it used to be, which was probably more promoter driven. Now we see a lot of PE players who are entering into this segment, who are ideally trying to institutionalize the entire healthcare space in some sense in India. In terms of the investments also, India has seen the highest in the PE space of investments in Asia Pacific. $4.6 billion in total of deal values of money which has flown into this segment. Again, record-breaking year from healthcare PE as such. Now, key drivers in this segment is obviously the whole story of India, a very large Indian segment, people, aging population. It's going to keep requiring more and more healthcare. Insurance penetration is driving into this segment where people can afford healthcare very easily through insurances, because most of the companies are taking healthcare insurances for their employees and they are able to afford these kind of healthcare. But at the same time, there is tremendous increase of penetration in tier 2, tier 3 cities as well. Like now the entire Madhya Pradesh belt is going to come to Indore rather than going to Bombay for taking care of their healthcare requirements in general. Indian healthcare, again, with the market value, which was up at about $77 billion in India, it's today at about $479 billion. So it's skyrocketed. Very hopeful that it will touch close to $1 trillion in the next 5 to 10 years in terms of its market cap to what it has in terms of its offering in India. Again, like I said, key drivers is obviously aging population, government initiatives to keep promoting good quality healthcare. If India is to become a developed economy, which is it's on track to, healthcare is going to be very, very large segment, which requires tremendous investments also at the same time. Medical tourism, India has been a very large medical tourism business, especially Chennai, in some sense, thanks to Apollo and multiple other drivers have been large businesses for medical tourism in India. Technological advances, again, is one thing, and insurance penetration, which I mentioned before, is a thing. But at the same time, the way India's per capita income is increasing, people have a lot of disposable income, and quality healthcare is now a necessity rather than a luxury. And that is the way we foresee this sector will also continue keep growing. India 2022 has close to about 44,000 private hospitals and 26,000 public hospitals. In terms of beds per thousand, we are 0.5 beds and 1.4 in private, public and private. Global average is 3.2. So we're just about 1.9, just a little over half from what the global standards are. In terms of global scenario, US is at 2.9 beds per thousand, UK is at 2.5 beds per thousand, China is at 4.3 beds per thousand, Japan is an outlier, is at 13 beds per thousand because of significant aging population. Vietnam is 2.6 per thousand. So India is just at 0.5 beds. So you can understand the need for great quality healthcare real estate more than anything else, because clearly we don't see it a doctor or a patient problem, we see more a real estate problem, and we feel Strata can be a partner in this segment to foresee and build large healthcare portfolio for ourselves. Again, in terms of significant PE investments, Manipal recently had Temasek invested. Temasek invested in Dr. Agarwal Healthcare as well, in HCG, in Medica Super Specialty. True North, again, a very large PE fund invested in Manipal, Kims, Cloud9, Sequoia invested in ASG. So significant investments are going. Many people have always had this point that, hey, all these people used to pay in cash for their treatments before. All of that is moving. In fact, including insurance, you see a lot of players now moving towards cashless treatment. It's going to be a norm sooner or later, where everything will be cashless, so everything will happen more seamlessly. There is something called as an ABA card, which government has also rolled out, which is your national healthcare card, which you can apply for yourself. Going forward, when you go for your treatments, you give your ABA number, and automatically your entire track record of any treatments which have happened, any medicines which you've taken, everything will be a track record as a national repository which the government has built. And is slowly penetrating. It's there in Bangalore in many places. I'm sure pan India, like how Aadhaar got penetrated, you'll see over a period of time this will also get penetrated as such. Now, what is exciting is about most of these PE players also look at exits. So there are a lot of these companies which have gone for IPOs. Uh, let's say Rainbow, which listed in 2022 at 506, today at 1315. 1.6 growth since listing. Kim's likewise has seen a 1x jump. Aster has seen a 2x jump. HCG has seen a 1x jump, and Narayana has seen close to a 3x jump. So a lot of attraction is there in this segment, not just in private equity, but also in public markets, and significant value appreciation we are seeing in this segment with these large healthcare operators. It is also going to see a trend where these smaller hospitals will have tough time driving businesses, because these larger players will have more penetration, better branding, better equipments, and better processes for them to do it, and obviously better borrowing also over a period of time, which will allow these large branded hospitals to do. So this was a year where we saw close to a significant amount of buyouts in this segment, where a lot of smaller hospital chains did get bought out by a larger hospital chain, and that is going to be the trend which is going to keep continuing as such, and these larger players will become more organized and probably be able to give better healthcare at better prices also. What is even exciting is how the Nifty healthcare index has performed. Obviously, you've seen most of the stock of these large healthcare companies have doubled or tripled. But from Jan 2020 to now, we've seen a 2.5 times growth with respect to how the Nifty healthcare index has performed. Again, you can always argue instead of the asset, I would rather invest into this Nifty healthcare index. Obviously, that's always an option. But these are drivers which keep driving the Nifty index to keep scaling up in the healthcare segment. Now, hospitals as an asset, real estate issue for healthcare providers is you've rarely heard hospital assets, on sale, or people who are looking at leasing hospital, because most of the large hospitals own their own real estate. We rarely see situations where people are wanting to go into asset light. Few players are very smart, have been doing it for some time, but majority of them haven't done a scenario of this nature. But again, this has been a large deterrent for large players or even medium players to become large players, is because of its financial constraint. A normal multi-speciality hospital of about 300 beds requires about 200 crores in real estate and about 200 crores in equipment investments also at the same time. So you're talking about 400 crores of money, which has to be pumped. Even if a bank is ready to give them debt, bank will give them about 100, 150, 200, 250 at max. They still need to cough up sizable amount of money and put into their real estate in general. If you go back to the slide and see the P ratios at which all these companies are trading, participating and putting so much money in real estate might not make a lot of sense for these players. So this is where we are seeing that can there be a large opportunity for investors like us to come in and offer an asset-light solution where we enter into long-term leases with them with long lock-ins and they can focus on their core operations of business. Operational dilution is a very large point. Again, it's not their core expertise for a hospital operator to build hospitals. He might know the nature of what all he needs in that particular premises, but it's not their core business. At the end, they might not know how to negotiate a land or the prices at which they're buying. Eventually, all these things add up to the cost of service they provide in that particular thing. So again, we're trying to be right partners with these operators and try to build large healthcare portfolio for our investors by becoming a win-win situation through the expertise which we can bring on board. What is also important is because of the large investments people have to do, they have their own constraints to take certain calls for upgrading their current equipments as well, which again we believe we as right partners could allow them to do it, which makes it inefficient resource allocation from their business standpoint as well. Now, healthcare sector in the news, India needs close to 2.4 million hospital beds, which is close to 24 lakh beds is what we need to reach the recommended ratio, which the government has been recommending. So clearly there is a lot of requirement. Like I said, it's not a doctor or a patient problem. It's clearly a real estate problem, and we are trying to solve. One thing which is there why this segment has not seen a lot of real estate growth is also because a normal property, let's take a land, if a same developer or a landlord wants to build an office, he might get 20-30% extra rents on the similar property. And a cost of construction is about 20-30% lower than a hospital because hospital comes with higher specs also in general. So for a developer, the ROI is not very attractive. Hence, not every developer is very incentivized to build a lot of healthcare portfolio in general because their residential or commercial office returns are substantially better. Developers have built healthcare, which are part of these integrated cities because it's a great selling proposition from their stand. But is this the right ROI for them vis-a-vis the land opportunity? Clearly, no. But that's where we are trying to be those right partners for them to do and create these kind of structures by giving them a win-win situation as such. So somebody has to look at this segment on a 25, 30-year kind of a thing, not a 3 or 4 year kind of a scenario when you're investing, purely because you're taking a little lower rents to start with. But when you have a 25, 30-year kind of an investment time frame with the kind of lock-ins you have, that covers it up over a period of time. So this is not something which every developer or an investor looks at, and hence healthcare has seen a backlog with respect to its development capabilities in India. Again, India needs close to 2 billion square feet. We're just doing about 4 lakh. So there's a lot of catching up to do for us to meet the requirement India typically has as such. Now, this property, like I said, is just crossing Bangalore border where it is in Hosur. Hosur today has 2.19 beds vis-a-vis the market, which is better from Indian standards, which is only 1.9. But having said that, this is a basis benchmarking of the population of Hosur. Most of the Hosur population are people who work in factories, whether it's Ashok Leyland, TVS. Tata is setting up its factory, which is going to employ close to 40-50,000 people. 8,000 have already started working in phase one. Like we heard the news of Apple crossing $14 billion worth of exits, $15 billion worth of exits in India in terms of export. This will scale up to $100 billion and will employ close to 40-50,000 people in Hosur itself. Apart from other electronic manufacturing, whether it's Delta, Ola Electric, Ather, all have their own factories in Hosur. So the people keep coming and going as such, and hence the requirement for occupational hazards or other things are very high. And hence the same operator, which has 2 hospitals within, like I said, in a 30-40 kilometer radius, is expanding in this particular market also. So upcoming hospital, apart from that, other hospitals which exist, this will be the biggest hospital once developed. Phase one is 315. There's another phase two of another 150 in the same premises, which is envisaged in future if there's a requirement. But apart from that, you have government hospitals over here. We have another brand called Kaveri who has their own hospital and multiple other things over here. But predominantly, these are government-backed hospitals. So private quality healthcare to consider, this will perhaps be the best and the biggest in this particular market. Location overview, like I said, apart from where we are and the SIPCOT, the same micro market, apart from these factories, is also a dent for somebody to come right from a Krishnagiri to Dharmapuri and the entire belt in and around Dandini Kote, etc., Raikota, etc. This is perhaps the best hospital in a 40, 50, or 100-kilometer radius within that same premises. The next closest one, apart from Bangalore, is going to be Vellore, in some sense, for such large quality healthcare providers. Like I said, asset location is very strategic, right between SIPCOT 1 and 2. There's SIPCOT 3 also, which is coming, which government has started allocating to large factories, was setting up EV manufacturing, battery manufacturing, recycling, and bunch of other businesses, and electronic manufacturing, which is the hub Hosur is slowly becoming up. And there is an upcoming metro rail which is going to come till Hosur. So, even people in Anikal, Atibele can also look at coming into these segments. Obviously, any operator takes a lot of call before deciding to pick up a location and setting up such a large hospital, because they themselves are going to invest about 200, 250 crores in this particular premises with respect to their investment. Hence, they very strategically have chosen this property. So this property is bang on the NH 48. 4-acre property, 4.2-acre property is where this property is. So asset overview, it's phase one, it's 289,000. There is possibility for phase two as well, but we are acquiring the land today itself and keeping it. If there is a requirement for the tenant, we will do it. Our returns will only get better over a period of time if they do it. There will be close to 330 car parks and 335 two-wheeler, again, way beyond the norms which is required for an asset of this nature as such. Again, hospital amenities, it is going to be oncology specialty as such, apart from multi-specialty. So there is a nuclear medicine department, which is going to be there, and radiation chambers below. But at the same time, it will have chemo and other normal clusters, which is required for them to do it, will be part of the hospital amenities, which will be as part of this project as well. So this is the site location where it is situated. Like I said, part of a large land. Phase one is only this one. There's enough and more land for them to expand in future. So again, it is stickiness, which is there, that we're giving them an opportunity to expand as such, because land is still a very smaller cost than the construction in general or the entire project cost, but giving them right and an opportunity to expand is more important than anything. So this is very well thought executed plan from the operator as well, who propose an option for us to participate into something like this. All right, so tenant overview, it's a leading multi-specialty hospital. It's in business for over 25 years. It has 2,500 beds, 8,000 employees in India across 6 locations, and has been profitable over the years and has a rating of A plus across their different SPVs, which they own their particular hospital as such. So terms and financials, we have a 25-year lock-in and a 30-year lease, extendable 25-year lock-in, 30-year lease. There's a rental escalation of 4% every year on the warm shell. We start the rents at about 46.62 square feet per month, and insurance and property tax will be borne by us. Just the investment breakup, the gross purchase price is about 74 crores. Which includes, land approvals, construction, mobilization, etc., stamp duty, registration, our acquisition fee, which we charge, legal and reserves for the particular transaction. So tranche one is 45 crores, which is what we are raising currently, and then subsequently for the other SPV, we will be raising as well. Financial model, again, the standard financial model which we have, nothing changes. You'll have access to it so that you can play around with it and understand what returns it would be making as well. In terms of rental, we've just taken a 7-year investment in this particular frame. We will hit close to 9.76% as as rental return at the end of 7th year, and at the end of 25th year, when the lock-in ends, our rental return will be about 22% as such. So that's significantly high. Great product for somebody who has long-term mindset, for them wanting to get some large capital pool eventually. It's perhaps a great product for them to consider. It's something we've been working, like I said, for a long time. Very happy to see the asset seeing the light of the day over everything else. Just the growth multiples at different growth. What is the IRRs it will have? What is the multiple MOIC, multiple of invested capital we will make? In a 7-year mindset is what we've made as of today. We did get a lot from our existing investors when we did open this opportunity a couple of days before for existing to participate, because they get the right to participate for any opportunity before it is open for everyone. Is 25-year lock-in a good thing or a bad thing? It is good in multiple ways. As such, again, this segment is recession proof in some sense. So there is consistent, reliable income which you're getting from long term, and it's a large operator, profitable in few hundreds of crores in terms of their profit as well. They are backed by large P investors as well, and soon will be listed. So there will be a lot of other better comfort we can get out of it. But apart from that, like I said, it's a segment which is also being promoted by government for adding more and more healthcare, as which gives you more investment stability. There are a lot of healthcare zones which are also opening, which is also a great thing. And most of these operators will come with a long-term mindset, because you would rarely heard any hospital which is a large brand shutting down, because the real estate becomes a landmark in itself. So they typically want to sign long leases. Mine would be more than happy to give lower lock-ins. We've negotiated a higher lock-in, because if you are locking us, we would also want you to be locked in. Second advantage we see is that, okay, we see a 15-year investment mindset. We make 3 times our rental returns as an investment. We say, okay, we want to exit. A great proposition, because a new buyer also wants lock-in. There's another 10-year lock-in in that property for people, right? So that is another point where there is a lot of interest as such. Again, you've rarely heard hospital assets coming on sale with these large operators. So again, it becomes a great proposition that we get a large premium for ourselves when we want to exit. In a 25-year period, let's say we decide to exit after 10, 15 years, you enjoyed the prime years of a property. We're very hopeful that as India progresses to a $5 or a $7 trillion economy, during the time we look at exit, interest rates will come down, which will again be a significant upside from a value appreciation standpoint, that we'll get significant cap rates when we want to exit as well. But this, when you have long lock-ins, your exit becomes more easier, because any new buyer, like I said, always comes to have his investment protected and will be more than willing to pay top dollar, and this asset will become a landmark asset over a period of time. So combination of these factors make a 25-year lock-in very beneficial. Otherwise, we would have just had a 30-year lease, which is also a lock-in where we can't terminate them. But when we have a 25-year, they can't terminate us also for 25 years. So clear visibility of getting rents for the next 25 years is very evident, through through this particular asset for investors. Now, this is very interesting, and we were talking to one of the investors who did bring up this point that, hey, I would love to invest, let's say, a bond or a retirement fund or an investment which I want to do it for my child so that his education can be covered, or whatever, XYZ reasons. We said, okay, whatever monthly returns you do get, if you could sip it in a debt fund which is giving you 8-9%, the returns are substantially high for yourself. So it can be one investment which you set aside for a long term and do not touch it. And you see the power of compounding of your investment, including the monthly returns which you would be generating out of it. We can generate close to about 11 to 12 times in terms of our return in a 25-year duration standpoint, which is again unprecedented from any of our assets which we've received, which we've listed on a platform or acquired in the past. This is one of those assets which can be decided to be held for long term. Again, the decision of holding is in the hands of the investors. We are here just giving you the proposition. If you do decide to retain for 25 years, what are we looking at as such? The investment thesis is clear that we are working with a very large multi-specialty hospital brand. We are giving a part of a micro market which is seeing tremendous infrastructure and industrial growth. We have a 25-year lock-in and a 30-year lease, and the only superior hospital we have is 20-kilometer radius, which is their own facility as such right now. So pipeline for this is we do the registration, then it takes about 1 to 2 years for the construction, for it to be fulfilled, and then the project gets commenced. We start getting our rent from day one. This is something which we've been very careful and trying to ensure we protect ourselves in every standpoint. We are registering the land and the lease deed on day one so that a clarity of rents coming irrespective of the construction. Apart from that, we've appointed a very large bank who is part of the contract, who's underwritten the entire transaction and is governing the entire structure. They have appointed a lender independent engineer who's going to monitor and will be releasing CLP to them at the same time so that everything would be taken care of as well. So we'll participate. There will be a smaller element of debt from the bank eventually, which will be more like a rolling capital that they'll fund one cycle and then we will refund the cycle and then they'll fund the other cycle and then like this the transaction happens so that at any point of time there is no financial misgovernance as such. Second part, which is very important, is the contractor with whom we're working is the same guy who's built 4 hospitals for this particular thing, and we have a very very large uh, Fortune 500 PMC who we have appointed, who will be monitoring the project, and there will be monthly reports which would be provided to the investors over a period of time. Maybe we'll put in a camera as well so investors can track on live what is happening at the site, something which we'll work on. But this is the plan we've had where we've controlled and taken care of every risk mitigation possible with a bank, with an independent engineer, with choosing the contractor, which obviously is somebody who's worked with this operator in the past, who was recommended by them to work with, our PMC and bunch of other things which would be as part of the transaction asset. So the terms of the investors are a standard 30 lakhs is your investment. There'll be a rental top up and there'll be a management fee of 1%. There will be no performance fee for this particular opportunity in general. Reason being, we will be REITing this asset eventually. It will be listed on the stock exchange and we cannot charge performance fee once you list the asset on the exchange. Risk metrics, again, most of the risks have been mitigated, but there are low to medium risks for any investment. So in capital, recovery of principal amount is through rental incomes as well, and we have ownership of the entire asset on day one with the lease deed registered. Liquidity risk, again, a recommended time frame is 7. Again, the choice is yours. The compounding happens the more you stay in the property as such from your investment time frame. We will read this asset on the exchange subject to all the approvals from SEBI, which will allow you to trade the assets whenever you want to from the asset as well. Real estate and construction risk, as such, the bid process for a competition is done with a performance history. We've appointed a PMC to monitor, like Colliers and CBRE, to monitor the project. And the entire project is underwritten by a large private bank who is going to monitor and will be releasing funds. And then subsequently, we'll call for additional funds from the investors as well. Tenancy risk, again, it's a large hospital with a 25-year-old solid track record. It's profitable for several years. It's backed by several large private equity investors, and we have a 25-year lock-in. So we don't see a large tenancy risk in general from this particular opportunity. I'll quickly just go about us at Strata. We today manage close to 1,800 crores in terms of AUM. We have a mix of majority of office along with industrial and warehousing. Today, close to 3.5, 4 million square feet under management across India. Today, we're there in close to 8 cities, and hopefully we'll expand in more cities with time to come as well. Just our tenant portfolio, which we have right from where we own Puma's headquarters to Swiss Bank's India technology arm to Randox, which is their only office, and their research and development center, to multiple such clients we have in our portfolio who work out of our premises and continue paying rents to our investors. Right, I'll quickly just skim through the things about the dashboard, etc. There's an app as well where you can track each and everything with respect to your returns as well. We've been backed by certain prominent PE and VC investors from Elevation, Kotak, Mayfield, and Gruhas as part of the journey we are building this industry. Uh, in this particular transaction, we are working with HDFC as our partners for this, and Universal Trusteeship will be the custodians, will be maintaining all the property documents for this thing, and ICICI and Razorpay are our payment partners for this particular transaction. What is exciting with time is that the REIT regulations from SEBI have come. So whatever we do will now come under the REIT umbrella, and we will move into the SEBI governed regulations from a business. So this asset would then eventually be REITed out, which will give you a lot of flexibility to look at liquidating partial, fully, take loan against securities, get a good mark to market on a real time basis, and bunch of these other premises is what SEBI is very excited about, which is what is going to come once we REIT out this particular property as such.